we are having our paper again. So today we will have our 21st set of paper for LCCI Level 3 Financial Accounting. Today our paper is for December, year 2017. Okay, we are moving to our final lab. Okay, 10 papers to go. So again, 100 marks, 5 compulsory questions. Okay, let's start. Question 1. Question 1. Some information is given to us. Error. Okay, we have to do correction of error. Some explanation questions, and then also rental income. Okay, that is other receivables and payables. Okay, so let's start our paper. First one, we have to prepare the journal entries to correct the 2 errors. Okay, so the 2 errors. 1st of July, our year end, is it? No, we don't know. 1st of July, year 2016, Amy purchased a new motor vehicle costing 17500 to deliver goods. This was entered in error in the purchases account, and motor vehicles are depreciated at a rate of 25% reducing balance method. This had not yet been accounted for. Okay, so the error as well as the subsequent understatement of depreciation. Okay, so let us deal with it. Okay, so our year end is on the 30th of June. So it's corrected there. Okay, 17500. This is the cost of our motor vehicle. It is put in purchases. Okay, purchases is in the debit side. So if we want to correct it, credit purchases, debit motor vehicles. Okay, and then we have to charge depreciation, 25% reducing. Okay, this is our first year, so it doesn't matter because it is our first year. So 17500, 25%, that will be 4375. Okay, so depreciation, debit, depreciation, credit, motor vehicle, accumulated depreciation. Or accumulated depreciation of motor vehicle, or allowance for depreciation. Okay, so 4 marks done. Explain the overall effect on the profit for the year after the correction of these errors. So motor vehicles is adjusted, purchases is adjusted. Okay, this one, okay, related to our statement of profit and loss. Okay, so there will be an increase, okay, because it is in the credit side. There will be an increase because of the purchases and a decrease because of the depreciation, and the overall effect, okay, is the net amount of it. Okay, so 17500 minus 4375. Okay, you are asked to explain, okay, not just to calculate. So we have to explain. There will be an increase in profit for the adjustment of purchases, increase of 17500, okay, and then there will be a decrease. In profit for the adjustment of depreciation. The overall effect is an increase of 13125. Okay, state the financial statement used to assess the liquidity of a business. Liquidity. Okay, there are two that I can think of. Okay, the first thing is the statement of financial position, because you can look at how much current assets and current liability that you have. Okay, so it is quite straightforward in this sense. Okay, but then also you can look at the statement of changes in equity. Okay, to look at liquidity, how cash come in and come out of the business. State to stakeholders who may be interested in the financial statement. Okay, government, bank, supplier, customer, and so on. State two types of error that would not be detected. Okay, so error of commission, MS, error of principal. Okay, prepare the rental income. Okay, and then state rental income in advance. Okay, where will it be? Okay, you receive income in advance, you owe others services. Okay, the right to use your property. Okay, so it will be current liability. Rental income owed, okay, will be current assets. State two qualitative characteristic of financial reporting under International Accounting Standards Board framework. Okay, this one we have listed out last time. Okay, so fundamental qualitative characteristic, okay, would be relevance, okay, and also faithful representation. Okay, you have some representation. You have some other enhancing characteristic. Okay, you may go back to the last paper to take a look. Okay, so now we have to deal with the rental income account. Let's see what is given to us. During the year, Amy received rent of 57450 by check. This includes 1450 from previous year. Okay, so include 1450. That means last year we have rental income in arrears. Okay, that's why it is included in it. Okay, let us put these two, and then we have tenant A, tenant B. Okay, one is owing arrears, one is payment in advance. Okay, so we'll have balance in both sides. Okay, 1450 in arrears. Let us put these two figures first. Rental income is in the credit side. Okay, so rental income in arrears, it would be, let's see, 1st of July. It would be in the debit side, okay, because it is a receivable for you. Okay, so 1450 here, opening balance. Okay, and then during the year, you receive a total of 57450. This is receipt total. Okay, and then later you will transfer to the statement of profit or loss. Okay, and then you'll have two balances. Let me use another color. Balance brought down, this is in arrears, someone owe you money, and then you have here rental income in advance. Okay, so once you get this correct, okay, this is quite easy, you just put it back. Okay, so in arrears 980, in advance 750. Okay, so in arrears 890, in advance 750. Remember, always just put the figures in the balance brought down. This is the real balance, and then transfer it back to the opposite side, okay, for your closing balance. Okay, so we have 31st June balance carry down. Okay, then you must get it correct. Okay, if not, okay, easy to make mistakes. Okay, balance carry down. Okay. Okay, you will have the transfer to the statement of profit or loss 56140. Okay, done. First question, 21 marks, done. Second question, extended trial balance. Okay, so we have 6 items. Okay, and then calculate value of inventory, explain inventory. Okay, we're referring to an accounting standard. Okay, I like this. International Accounting Standards number 2. Okay, it requires that inventory should be valued at lower of cost or net realizable value. Okay, so we have calculation of inventory, and then the depreciation of land and buildings, motor vehicles, and then 13 marks for the preparation of the adjustment columns of the extended trial balance. Okay, so let's see. Our year end is on the 31st of August. The following transactions have not yet been accounted for. As at year end, inventory was valued at a cost of 24,000. This included damaged goods costing 1,200, which could be sold for 1,375 after repairs of 250. Okay, cost 1,200, NRV 1,375 minus 250, 1,125. Okay, that is, we have an impairment of 75. Okay, let's see if there are any other items related to inventory. No. Okay, so we have original value 24 and then minus 75. Okay, 24,000, impairment 75. So we have 23925. Okay, so 23925, we can also put it in the extended trial balance, closing inventory, statement of financial position. Okay, this is in the debit side, credit side here. So 23925. Oh, later we need to fill in the total as well. Okay, don't forget that, because if the row is there, we have to calculate the total. Okay, next one. During the year, motor vehicle was sold for 12,000. This was purchased on the 1st of January, year 2016 for 14,000. The accumulated depreciation on disposal has not yet been transferred to the correct account. All other entries relating to the disposal were recorded correctly. Okay, so only the accumulated depreciation not yet put in the disposal account from the accumulated depreciation. Okay, so depreciation method, land and buildings, 2% per annum. Okay, later. Motor vehicle, 20% per annum, reducing balance method, full year depreciation charge in the year of acquisition, none in the year of disposal. Okay, so for the disposal of motor vehicle, it is purchased on the 1st of January. Our year end is 31st August. So the first year would be in the on the 31st August, year 2016. This is the first year. Okay, and then it is sold during the year. Okay, that means 14,000, 20%. That means 2,800 should be transferred from the accumulated depreciation account, okay, to the disposal account. This is not yet done. Okay, so let us update it yet first. Motor vehicle accumulated depreciation. Okay, it's in the credit side, as you can see in the credit side. Okay, we want to reduce it, so 2,800, and then disposal 2,800. Okay, so you can see this amount, okay, is from a debit of 14000 and a credit of 12000. Okay, 2,000 net amount. Okay, anyway, let us move back to the depreciation policy. Okay, because we have to calculate the depreciation for land and buildings and motor vehicle. Okay, let us look at motor vehicle first. Okay, we have 20% per annum reducing balance method. Okay, so go back to this. Let us see how much we have. Motor vehicles cost 60,000, and then accumulated depreciation. Okay, remember to update it. 244 minus 2800. Okay, that will give you 21800. Okay, and the net amount 60,000. Okay, is equal to 38400. 20%. Okay, that would be 7680. Okay, so it will go into the accumulated depreciation 7680. Okay, and then depreciation, you can see there's only one item. That means we have to add, okay, 7680, and then also add the depreciation of the land and buildings before we can put the item. Okay, so 7680, we can put it there, can show the calculation. Okay, how about land and buildings? Let us see. 2% straight line. Land and buildings included land costing 150,000. Land is not depreciated. Okay, 150,000 land, and then 2%. Let us go back to the balance. Land and buildings at cost. Okay, if land is 150, that means building would be 100,000. Okay, and then 2% per year, that is 2,000. Okay, so add 2,000 here. Okay, we have 9680. Okay, 2,000 also go into the land and buildings, accumulated depreciation. Okay, and also go into here. Okay, let's see how many more items. We have 3 more items. Okay, we are Tahira. Is it? Yes. Tahira paid trade payables 5750 from her own monies. Okay, so this is increase in equity 5750. Pay trade payables. Okay, not yet entered. So trade payables is in the credit side. Okay, if we pay 5750, will go into the debit side, reduction of trade payables. Okay, and then equity. Okay, add to equity 5750. Next, 1250 irrecoverable debt, and then maintain 2,700 for allowance for doubtful debt. Okay, so irrecoverable debt 1250, a reduction from trade receivable 1250. Okay, irrecoverable debt. Okay, originally it is 2500, now it is 2700. We have an increase of 200. Okay, so allowance is in the credit side, so we further increase by crediting. Okay, and then the adjustment, because it is an increase, it will be an expense for you. Okay, so debit side. So now we have finished everything. Let us calculate the total. We have 43605. 43605. Okay, so question 2 done. Let us move on to question 3. Question 3, partnership. Dan and Fergus were in partnership, sharing profit and losses in the ratio of 2:3. The partnership agreement provided for interest on capital 8% per annum, salaries 12% per annum for each partner, 12,000. Okay, on the 1st of October, that is the opening balance. Their capital and current account balances were as follows. Okay, both current account debit. On 31st December, that is 3 months after that, 3 months after the opening beginning of the year. Let me mark down. 3 months. October, November, December, yes. Then retired from the partnership. He took motor vehicle at an agreed value of 14500, and the remaining balance owed to Dan was paid by check in full. Non-current assets were revalued at and a profit on revaluation 18400. Goodwill 28,000. For the year ended 30th September, the profit was 81,000. Profit accrued evenly throughout the year. Okay. Appropriation for the 3 months. Share of profit for Dan, share of goodwill, current account balance, and then capital account of Dan. Okay, and then discussion. Okay, not difficult. Okay. Salaries. Okay, I remember it's 12,000 per month, per year. So it will be 3,000 for each partner, 6,000 in total. Okay, other things I do not remember. So first of all, 81,000 for the profit, and then we have to see how much is for 3 months. Okay, and then the interest on capital. Okay, 100,000 for Dan and 150,000 for Furthest. Okay, 8% interest per annum. So it is only for only for 3 months. Okay, so 100,000, 8%, and then 3 months it will be 2,000. Okay, and that means 3,000 for Furthest. Okay, and then profit sharing ratio 2:3. Okay, so let us see. 81,000, and then for 3 months, that would be 20250. Okay, interest on capital, just now we have calculated to be 2,000 and 3,000, total 5,000. Okay, so minus 6,000 minus 5,000, we have 9250. Profit available for distribution, and then share of profit 223, right? Okay, so divided by 5 multiplied by 2, we have 3700 and 5550. Okay, so appropriation account done. It is for 6 marks. Okay, not bad. And then we have the share of profit on revaluation. Okay, let us go back to the information given. Okay, 18400 total. Then is for 2 parts. Okay, share 2 parts. 28,000. 18400 28,000. Okay, the share of profit on revaluation 2/5. 7360. 11200. Okay, quite. Oh, no, 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 please, no. Okay, current account balance. Current account balance. Let's see. Originally, the current account for then is 5300. Okay, so 5300 negative. Okay, we have interest. We have salaries first. Interest on capital. Share of profit 3700. I remember. Okay, so let us check. Yes. Okay, so we have to see if there's any drawings given to us. Okay, it seems no, there's no drawings mentioned. So that's all. Let us see. Plus 3,000, 2,000, and then 3700. Then we have a balance, positive balance of 3400. Okay, and then last we have the capital account of then. Capital account is in the credit side. Okay, so we have year 2016, 31st of December, or I should put 1st of October. The balance brought down. We have 100,000 opening. Okay, and then other things happen on the last day of year 2016. Okay, revaluation, goodwill. Okay, 7360 11200. Okay, and then also the current account of then 3400. Okay, after that it will be our final settlement. Okay, so let us go back. For the final settlement, Dan took a vehicle costing for 14500, and then the balance paid by check. Okay, so motor vehicle, $14500, and then the rest will be settled by a check. Okay, so that will be all. 100,000, 7360, 11200, 3400 minus 145. That will be 107460. Okay, so finish. Next one. This is the capital account, 7 marks. Nice. Okay, and then we have a discussion question before our break. Okay, so on the 1st of January, Emma joined the partnership Emma and Fergus are considering converting the partnership into a private limited company. Okay, so this one we have been dealing with it for a few times already. Discuss whether they should continue as a partnership or convert to a private limited company. Okay, so you are going to, of course, compare limited liability with unlimited liability. Okay, you have to compare the assets to fund. Okay, whether it is easy to get more funds. Okay, also the formalities. Okay, because for partnership there will be less formalities. Okay, there's no need for audit. Okay, this will save you time and money and effort. Okay, that divert you from operations to these formalities. Okay, again, okay, I think the most important thing is about the future of the business. Okay, so if it is expanding and you can see it needs more fund, it is going to continue to expand, okay, then it is good to change from partnership to a limited company. Okay, if not, okay, then better stay simple and then continue to be the partnership. Okay, so that's all for this discussion question. Okay, let us see what will be there for question 4 and 5 and then go for a break. Okay, question 4. Question 4 is a single entry. Okay, information given to you. Okay, and then calculate credit sales, cash sales, total sales, and then purchases, and then the statement of profit or loss trading section. Okay, and then you have some evaluation of accounting ratios. Question 5, okay, 2 years balances, and then the this is the non-current asset register. Okay, so that would be statement of cash flows. Yes. Okay, so let's take a break and we will come back in around 10 minutes to finish these 2 questions. Okay, let's go on with our paper. Question 4. Single entry. Okay, so we have to calculate sales and purchases, and then the statement of profit and loss, trading section. So on 30th June, Wang's inventory was destroyed by fire. Okay, so there is loss of goods, inventory loss. Okay, he provided the following information. On 1st of July, inventory was valued at 43250. Right? Okay. During the year ended, cash sales cash purchases given to you directly, all the goods were sold at a 25% markup. Trade receivables collection period 36 days. Trade payables payment period 40 days. Okay, and then we have we have trade receivables and trade payables. Okay, so we have credit sales, credit purchases given to us. Let us put the credit sales and credit purchases as cash sales, cash purchases first. Okay, we have 65,000 and then 2,400. Okay, credit sales, we have balances 27,000. Okay, 32400 for trade payables, 36 days and 40 days. Okay, so 27000 and then 32400. Okay, over, we don't know how much, credit sales, okay, multiply by 365, we have 36 days. Okay, 360 days assumption. Okay, so 360. Okay, and then for credit purchases 360, we have 40 days. Okay, so that would be divided by 36 multiplied by 360. And that is, yes, okay, that would be giving you credit sales of 270,000. Is it? Yes. Okay, credit purchases 32400. Okay, 291,600 for credit purchases. Okay, total purchases would be equal to 294,000. The two added together, 65, 270. That would be 335,000. Okay, and then we have to prepare the statement of profit or loss. Okay, so we have revenue less cost of sales, okay, opening inventory at purchases less inventory loss. We are not given any closing, right? Everything was stolen, destroyed by fire. Okay, everything was destroyed. Okay, and then we have 25% markup, so no closing inventory. Our opening balance 43250. 43250. Opening inventory 43250. Okay, our markup gross profit 25%. Okay, let us check again. 25% markup. Okay, markup is on cost. Okay, so again, if cost of sales, okay, so this is what we have to calculate. If cost of sales is equal to 100%, okay, then gross profit is 25%. That means revenue is equal to 125% of cost. Okay, so with this 33500, we can calculate cost being 268,000 and then 67000 as the gross profit. Okay, let us verify. 335 minus 268, yes, 67. Okay, and with the cost of sales, we can calculate the inventory loss. 268,000 minus 43250 minus 294,000. That would give you 69250 as the inventory loss. Okay. One thing that is of concern, okay, that is it sets for on the 30th of June, that is the year end, when's inventory was destroyed. Okay, so for me that would be inventory loss. Okay, but then in the mark scheme it sets closing inventory. Okay, that is not good because it is not your closing inventory. Your closing inventory is now 0. Okay, so that should be inventory loss. Okay, so it's done here. Okay, state the formula for inventory turnover. Inventory turnover is equal to cost of sales over average inventory. Okay, average inventory. Okay, so next one. State which principle of professional ethics he would compromise. Okay, Wang is thinking of adding 20% to the inventory valuation calculated in B. What? B is what? Okay, for his insurance claim. Okay, at 20%. I don't know what to say. I think it is related to integrity. Okay, because he knows, okay, our inventory loss is 69250, but then you deliberately add something to it, okay, to make it larger for a higher amount of inventory claim. Okay, that would be dishonest. Okay, so integrity. Okay, last, Wang is interested in the performance of two rival companies. Evaluate which business is performing better. Okay, let's go back to the information given. Okay, evaluation of the performance of these two. Okay, gross profit percentage. Okay, Su is better. Profit, Su is still better. Current ratio, Adam. Quick ratio, Adam. Okay, so in terms of profitability, of course, Su is better. Okay, a higher percentage, gross profit percentage. Okay, that is, he's able to sell the goods at a higher price or get the supply of inventory at a lower cost. Okay, also, okay, for a higher net profit for the year, although you can see from 15 to 9%, from 18 to 10%, Su is not doing that well in maintaining the profit, okay, or reducing, controlling the expenses, okay, but then still, overall speaking, the profitability is better for Su, okay, but then for liquidity, Adam is better, okay. This means that the business is less risky, and Adam is more able to repay its current liability using its current asset, especially for the quick ratio. Okay, without liquidating its inventory, Adam is more able to repay its current liability. Okay, so overall speaking, I would say Su performed better. Okay, but then it would be nice if Su could improve its liquidity. Okay for both. Okay, you can support Adam or you can support Su. Okay, last question. We have statement of cash flows. Okay, so we have this information given to us. Okay, and also for non-current asset register. Okay, state one purpose of the statement of cash flows. Okay, it is to show the increase, movement, or decrease in cash and cash equivalent, of course. Okay, or show wait. Okay, show the cash used or cash inflows in operating, investing, and financing activities. Okay, so we have reconciliation from profit to operating cash flows. Cash flows from operating activities. Let's see what is given to us, and then also the statement of cash flows. Oops. Maybe I'll just use one column. Okay, and two columns for the statement of cash flows. Okay, no evaluation questions. Very nice. Okay, so here 10% bank loan. Okay, remember again, closing balance is in the left hand side. Okay, there is a decrease of bank loan, 25,000, the repayment of bank loan. Bank and cash in hand. Okay, no short-term investment. So here and here we have 2,000 opening, and then 7450 closing negative. Okay, there is a decrease of 9450. Inventory 48750 minus this one, we have 14100 positive. I mean increase 14100. Trade receivables 9585 increase. Let me confirm. Yes, and then trade payable a decrease 6325. Okay, so all negative. Revaluation reserve from 0 to 100,000. Okay, later we have to see if there is an increase, okay, in the valuation of our non-current asset shown in the non-current asset registered. Okay, we have an increase of share capital and share premium. Okay, let's see what is told about that, okay, later. Sales, okay, no dividend. That means everything for the increase is the net profit. Okay, so here share capital at 200, share premium 75 to 125, that is 50. Okay, so these together we have 250. Issue of shares. Okay, issue of shares, financing positive. Wow, we have that large an amount of share issued, and we still have a large decrease in cash and cash equivalent. Not good. Okay, so retained earnings. Oh well, I know. Retained earnings from 187,575 to 121,145. Okay, that is a decrease of 66,430. Okay, that is a net loss for the year. Okay, used in the operating activities. Negative net loss. Okay, that's why you have a large decrease. Okay, so last we look at non-current assets. Okay, we have three types of non-current asset. Okay, first of all, you can see we have a revaluation gain. Okay, that is we have in the revaluation reserve an increase of 100,000. Okay, and then other additions. Okay, investing activities. Disposal. The sales proceeds of the motor vehicle was 33200. Investing. Okay, and then we have to calculate the disposal gain or loss. Okay, so we have 33200 here. The cost is 45,000, and then the accumulated depreciation 16200. Okay, that would give you a carrying value for the disposed asset of 28800. Okay, and 282 we have 4400 disposal gain. Disposal gain is in the operating activities negative. Okay, so how about depreciation for the whole year here? Okay, add to the 17500, 59450, 26240. Okay, together we have 103190. Okay, this is depreciation for the year. Operating activities positive. Okay, so everything done. Okay, let us go to the reconciliation. Okay, first of all, we have the net loss for the year. Okay, and then add depreciation less disposal gain. Okay, and then all three are negative effect: increase, increase, and decrease in inventory, in trade receivable, in trade payables. Okay, and for this, I think it is a negative effect. Okay, so let us see. Okay, so net loss 66430. And then we have this depreciation 103190. Okay, disposal gain 4400. Disposal gain 4400. Okay, net loss 66430. 66430. Okay, and then depreciation 103190. Okay, the three remaining items: 14100, 69585, 6325. 6325. 14100, 9585. Okay. Okay, we still have a positive balance. Okay, net cash from operating activities. Okay, so let us move on. 2350. Net cash from operating activities. Okay, next we have cash flows. Cash flows from investing activities. Okay, we have add proceeds from disposal less acquisition of land and buildings less acquisition of what I don't remember, let us check. Plant and machinery. Okay, the disposal is for motor vehicle. Okay, so proceeds 33200. Addition, land and buildings is 150,000 and then 120,000. Okay, 150. Oops, not here. 150. 120. Okay, so this is plant and machinery. This is motor vehicle. 36200. Okay, a very large amount. Two 332. Okay. 33200. 236,800. This is net cash used in okay, last of all, we have financing. No dividend. Okay, issue of shares 250,000 positive. Repayment of bank loan, we have 25,000. Oops, 25,000. 225 here. $9,450. Yes, that is what we have calculated before. Okay, we have this net decrease in cash and cash equivalent. Okay, and then 1st of October, year 2016. 30th of September, year 2017. The last two items being 2,000 and then 7,450 negative. 2,000, 7,450 negative. Yes, correct. Okay, so that is all for today. Okay, 10 marks for this statement of cash flows. Nice. Okay, so this is our 21st set of paper. Still 9 more papers to go. 2 weeks, around 2 weeks. Okay, a little bit more than 2. Okay, until our exam. Okay, so hopefully tomorrow we still work on one set of paper. That will be November year 2017. Okay, so see you.